In this video, guys, look at 10 golden rules for Forex day trading. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me on the channel. If you're new here, consider subscribing for loads of videos we update regularly. We talk about strategies, talk about mindset, talk about discipline, Forex, stocks, indices, the lot. You are in the right place to improve your trading. But without further ado, let's get going on 10 golden rules for day trading Forex. All right, so number one, we've got never add to a loser. This is the biggest thing that people do. It ends up screwing them over, adding to a loser. The price goes against you, you're in a currency pair, you want to go long, you're long, starts to creep up, goes down, add a little bit more, add a little bit more, add a little bit more. Logically, it makes sense, right? You're lowering your entry prices, and a little pop up and you'll get a profit. It's a dangerous habit to do. You'll get away with it for a lot of times, but occasionally you're going to get wiped out. And even someone like Paul Tudor Jones, top of his game, top trading fund manager, has on his very old documentary above his office, above his desk, should I say, in his office, losers add to losers. If you remember that, then at least you won't get hit too badly when you do take losers. All right, number two, trade in a size that is sensible for your trading pot. So if you've got a $1,000 account, you don't want to be risking a size that means you're going to lose $250 on a trade. 4 trades, you're out of the game. If you've got a $100,000 account, of course, then you can trade a little bit more. But again, you don't want to be risking $25,000 per trade. You want to regulate the size. Now, the standard everyone tells you is risk 1%, 2% of your trading pot. And that's not a bad rule to go with. However, I will say that you've got to be a little bit careful with that, because sometimes I appreciate not everyone starts with a large trading pot. Sometimes you only want to put a small amount in. If you've got a small amount in, 1% of a very small amount is so small, but it's still not a bad place to start, because the point is, it's maths, guys. Pure maths is that if you're doing 2% of your trading pot as a risk capital, you can't, or 2% of a risk capital, a risk on each trade, should I say, you're never going to end up doing that much damage. And I'll come to that in a moment. So just be sensible with your size. I'm not saying go really, really small, but I'm just saying, be logical and think, hey, if I had 10 losers, what would happen? Would it devastate me? No. Well, okay, that's a little bit better. But 1 to 2% is what everyone says. I don't think that's bad. But if you want a little bit higher, I'm still not going to disagree with you either. Don't overtrade. Big killer of trading accounts. Overtrading. Trading because you believe there's something happening. You think you've got something there. You think the market's going to go here, and you pull the trigger. Trade your setups only. Don't shoot from the hip. Don't trade on a guess. And don't become a junkie that's just there clicking away, trying to trade every little thing, because eventually you'll wipe out. You've got no edge. You're trying to compete against the best in the world, in the markets. And if you're over trading, you haven't got an edge every time you take that trade. Be honest with yourself, less is more. You can always increase the size, right? Less trades, bigger size equals bigger profits. Number 4, always trade with a stop. Now, when you're super experienced, or when you've got a lot more trades under your belt, you can adjust this, and there's other ways to manage risk. And there's a couple of videos on the channel where I talk about alternatives to a stop. But for 99% of traders, guys, a stop loss is crucial. All sorts of things can happen in the market. You need to have a level that takes you out of the trade, so you don't lose more than you want to lose. Okay, because if you start losing more than you want to lose, then you'll end up not only wiping out your account, you'll end up trading emotionally, all these other things. So have that stop loss in and take it on the chin. When you get stopped, no one likes getting stopped out. Deal with it. Look to the next trade, forget about it, move on, learn from it later, but move on. But always trade with a stop, because your capital is the fuel. It's the fuel for your trading. Without fuel, guys, you're not trading. All right, so number 5, where are we? Try to look for good risk-reward ratio trades. So the best way to increase your trading pot, or increase your kind of performance, is to look for asymmetrical risk-reward trades. Hedge fund managers do this when they're looking at trades, not necessarily in the Forex market, and all sorts of trades. They try to express their trade with asymmetrical risk reward. What do I mean? You're risking 1 to make 5, or you're risking 1 to make 3 is fine. Even 1 to 2 is a good start. I'm not completely saying you must always have 10 to 1, because you're not going to find those. But if you can err on the side of trying to find a 3 to 1, so let's say you're really kind of trading short time frames, you want to risk, say, 20 pips to make 60. You know, that's very, very feasible if you find the right spot. You're trading a swing trading perspective, you're going to be looking a little bit higher. But if you can try and keep in that range, 2 to 1, 4 to 1, 5 to 1, 3 to 1, that type of thing, you're on the right side of things. When you're in 1 to 1, you're really not allowing yourself for any mistakes really, and the edge you've got probably isn't more than 50%. So over time, you're just going to spin your wheels. So try to look for those asymmetrical risk-reward ratio trades. All right, guys, focus on one thing and become an expert. So that could be a specific market. The best traders focus on 1 or 2 markets. There are traders out there who are fantastic, kind of 10 million plus a year traders, and they're kind of surveying multiple markets, but they'll still have favorites that they are their bread and butter, but they might kind of dabble in other things. That's where the key is, guys. It's becoming a specialist. Look at all the people out there who are trading every single currency pair under the sun. They're the ones likely losing money because they never get really in tune with a particular market. Have a handful of markets, forget about the rest, and focus on 1 or 2, if not even focusing on 1. You know, if you can focus on 1, I think that's the best. If you want to have a few, 2 or 3 max, then by all means, because volatility just does rotate from one to the other, especially if you've got pairs that aren't correlated. So focus. If you don't want to focus on a market, then focus on a specific strategy, whatever strategy that may be. Trend trading strategy, mean reversion strategy. We're going to talk about mean reversion strategies, momentum ignition strategies, exhaustion strategies. Go and check it out if that's your thing. But whatever you do, focus and laser focused on one specific thing, strategy or market. Take your pick, but make the choice. All right, number 7, guys, after a bad run, take a break. Honestly, we want to get it back. I know you do. You lose money, the first thing you want to do is want to get back. I want to get that account back to where it was before, man. Let's go, let's go, let's go. It's the worst thing you can do. You've got to just ease off and go, you know what? I've taken a hit. Let me reflect. That will serve you way better than trying to pile in and trying to recover that loss as quick as possible. Listen, it's human nature. When I undo the mistake, whoa, I want to get the money back, let's go back in. But taking the break and reflecting on it, whether however long that needs to be, you know, then do it, because it will serve you and it will make you a better trader in the long run. When you're dealing with bigger size, when you're kind of more experienced, you've got a bigger pot and there's more money on the line, then taking that break is really what you need. So if you put those good habits in now, then as you build your account and become a bigger trader swinging a bigger line, then you're going to have the good habits that really serve you when they need to serve you. All right, guys, what have we got here? Number 8, study yourself more than you study the charts. Controversial, I know, but this is a good one. People are always focused on the charts. They're thinking, I know what you like. You're there, you're glued to the chart. You want to look on your phone, you look at it on your iPad, your tablet, your desktop, your laptop, you're at work, you're this and that. You're always looking at charts. That's good, because you need to be looking at the markets, you need to be analysing the markets. But there's a certain point where you're overdoing it, and you're better off saying, okay, well, if I'm spending 4 hours, let's say, on the charts, then why not spend 2 on charts, be more productive and go through them quickly, look for your setup and strategies. And that's even easier when you're a specialist. That's another advantage of a specialist. You know what a daily chart looks like. It's ingrained in your brain. You're dreaming the damn thing. Now, the other 2 hours, you work on yourself, you look at your trades, you look at your journal, you look at all those things that are useful to you and you can improve. So self-improvement as well, because the discipline it comes down to, guys, comes down to psychology, comes down to all these things. And again, we talk loads on this channel, so we're going to have to dig around some of the videos. No time to go into it now. I want to keep this brief as I can, but working on yourself pays off massively. You'll get a big dividend from that. So what we've got now, number 9, don't follow tips. Goes without saying, it's tempting. If you're struggling and you want to just kind of, if I just follow a guy who knows what he's doing, I'm going to make money. The trouble is, it will never ever serve you or help you, because you'll never really get to a point where you know what the decision-making process is. You won't really understand why the call's made, and even if they do share it with you, you might not be as kind of relaxed with it. You might not feel as comfortable with the trade. It just doesn't work. It seems like a good shortcut. You think, well, I can learn how I can make money. But in reality, it's better just keeping it yourself, because everyone's got their own distinct way of trading. And the final thing, guys, number 10 is stay in the game for as long as possible. This is about longevity. It's not about trying to make 100,000 in your first month in trading. That may come later if you put the effort in now. The key now is to keep your capital for as long as possible. As I said before, capital is fuel. Without fuel, you're not a trader, so keep as much fuel in your tank as possible. Is why we're trading small, so why we're not over trading, because the more exposure you have, the better trader you'll become, and you only get exposure by placing trades. You only get exposure by placing good trades, having good trades, having some losers, having some winners, and preferably if you can stay in for as long as possible, you're going to give yourself a chance to get over that crest, to get to the point where actually things are fitting into place here. I've got a strategy that's working well. I'm focusing on one or two markets. Yeah, now I'm moving forward. I'm not spinning my wheels so much. I have my boundaries pulled in. I'm more focused on what I'm doing. So the key, guys, to that is to stay in the game for as long as possible. If you can do that, you've got a good chance. Take care. Make sure you're subscribed to the channel, notifications, all that kind of stuff. If you like this kind of thing, thumbs up's much appreciated. And let me know your thoughts in that comment section below. What's your 11th, 12th, 13th? Do you not agree with these? Always interested to hear what you guys have got to say. Whatever you're doing there, guys, take care, keep the risk managed. I'll see you soon. Bye-bye.